On my end too. So we're recording now.
Yes.
So guys, this is Jason Morris here with Real Estate Agents That Really Work, and we've got Larry Lee and Danica. I don't even know how to say your last name. I'm sorry. We got Greg Tanner and Jason Turner, and Larry, you might have to unmute Jason Turner.
Let me unmute Jason. And you guys have your cameras on, or I don't even know.
Yeah, it won't let me video.
Yeah. Okay, let me see if I can fix that real quick. It says forbid record, rename, remove. It doesn't even give me an option to change the video.
It says you can't start your video because the host has stopped it.
Jason's being a cock blocker. That's what it is.
It might be.
I'm gonna make you host, and then maybe you can do it. Right? I make everyone host, and then just change your video, and then just make the other person host.
There can only be one host. Yeah, there can only be one host.
Okay, Jason, you're on camera now.
Good.
What's up? So make Jason host, and then he can put himself in the camera, and yada yada yada. there's like ghetto webinars. I actually own ghettowebinars.com because all my webinars are always ghetto.
That's pretty funny, Larry. I'm not surprised, but it's funny.
We got Greg on here too. Cool. We got Greg.
Who'd you make host, Jason?
I think Jason Turner is.
Jason, make the other Jason or Donica or Greg host so they can turn on their camera.
How do I do that?
You go to the participants.
Yeah.
Right? And then you see like all the little buttons on pin.
Got it. Donica, you're the host now.
I am?
Yeah.
There you go. See?
There you go.
Okay, now what?
Now make Greg Tanner host. You go to panelists and make Greg Tanner host. See, there's a workaround.
Okay.
And then he should be able to put himself on camera. There you go.
Yeah. All right.
And then Greg, I guess you give it to Jason Morris. So Jason Morris, because he's the official host, and he.
Yeah,
No,
I'm just gonna. You know what? I'm not even gonna put myself on camera. You guys are the stars of the show.
Those are some real problem-solving skills there, Larry.
Yeah, well, Jason probably hadn't got a haircut in a while, so he probably like as a pro. That's why he's not really going.
Oh, dude, I'm in my pajamas. I'm in a wife beater, Larry.
Here, y'all.
So guys, thank you guys for being here with me tonight and doing this with me. I think it's really, really important that we have that we see. Well, we do stuff like this so that real estate agents can really see what's happening in the real estate world, because right now there's a lot of uncertainty as far as like, hey, a buyer that was approved 2 weeks ago, you were showing houses, is not a good buyer today. And there's some crazy stuff. I mean, I feel like I seen it in 2008. And I keep telling real estate agents, hey guys, this is going to happen. This is going to happen. And I feel like we're seeing it, but a lot of agents don't realize that the changes in the mortgage industry, we're not going to see those changes for sometimes it may be a month or two before we actually see them. And I keep telling people like that. So I tell you what, why don't I just be quiet? I'll let you guys introduce yourself, tell the market you're in. You can tell what mortgage company you want to work with, that you work with, and just what you're seeing the last few days or the last week or two.
Go ahead, Jason.
Yeah, sure. I mean, I'm Jason Turner. I work at the DMV, DC, Maryland, Virginia. I'm with Mount Diablo Lending. I'm a mortgage broker. I mean, I've seen a lot of craziness. I'll let you guys all introduce yourself because I don't want to take everybody's time. But I've seen a lot of tightening of a lot of guidelines, specifically in government lending. Yeah, go ahead there.
All right, so my name is Larry Lee. I'm a branch manager for Van Dyke Mortgage in the Dallas-Fort Worth, Texas area. What I've seen is a lot of people not answering their phones, as in like people that have been trying to send deals to. I've been seeing a lot of, not for myself personally, but a lot of deals that were in the pipeline, ready to be closed and funded, like literally just become like non-existent, right? Like just poofed.
Really?
Vaporized.
So when you mean people aren't answering when you mean people aren't answering their phone, you're talking about like a lender, like one of the people that's actually financing the loan. All of a sudden, they're just not answering the phone anymore?
Yeah, so kind of like just real quick example, like a non-QM, right, who offers like bank statement loans, right?
Okay. Tell us what QM
They
is, because
like
not all of us know what some of these acronyms are.
Okay, so QM for basically what it means is a loan that is typical or normal, like your bread and butter, conventional, FHA, VA. Non-QM is like the exotic, weird loans, like the no income loans, which exist. Bank statement loans means they don't look at tax returns. A lot of the down payment assistance kind of loans, those are non-QM, as like they're not the typical bread and butter regular loans that you're used to. So a lot of those companies are investors, so they actually will lend out where like the typical Fannie and Freddie won't lend out, because they actually hold the loan themselves, or they're financing the loan themselves. It's part of their portfolio, whatever, and they're tightening their I guess operations because of what's going on right now. So those people are not answering their phones. You go to the website, it actually says announcement or PSA. We are no longer accepting applications. We're pausing all activities until further notice, et cetera, et cetera, et cetera. So it's pretty scary. Yep. So Donica or Greg?
Okay, so I'm Donica. I'm also in Dallas. I work for Service First Mortgage, it's a correspondent lender. Last 2 weeks, man, guys, it's been a real shit show out there, right?
This is true.
Like, it started with uncharacteristically low rates that flooded us with a whole lot of business, and then there was a whole lot of business and rates tanked, and then the corona, and I don't know, it's been nuts. People are tightening up. Lenders are falling out. Like, it's a little insane, but I think we're in the thick of it right now. Hopefully it'll come back around.
Really? How about you, Greg?
Hey guys, Greg Tanner here. I'm with hey, sir, can you guys hear me? Make sure I'm not muted still.
Yeah.
All right, cool. With Fairway Mortgage. I'm in South Carolina, and the last 2 weeks has been interesting. The crazy part of what's happened is that it hasn't really had anything to do with the actual real estate market or the actual mortgage market. Like the 2008 meltdown, yeah, blame that on the greedy mortgage guys. I get it. We were doing some crazy stuff, but we really haven't been doing that. And this is all just based on the coronavirus out there, and this kind of sort of catapulted everything. And what's happened is the market that was buying a lot of the servicers that were buying these FHA loans, now that the government has said, hey, we're going to start, telling everybody they can do forbearances. So everybody's thinking, all right, great, I don't have to pay my mortgage anymore. And in theory, that sounds great. But what happens, and people are really slowly starting to realize, that let's say you do a 3-month forbearance. On that 4th month, all 4 payments are due. And no one's realizing that right now. And these servicers on FHA specifically, they have to make those mortgage payments to the investor, whether the borrower pays them or not. So the servicers are all of a sudden saying, well, wait a second, if there's a potential for a bunch of forbearances out there, we don't want to buy these loans. So that's why you're seeing the tightening of FHA and lenders going from, hey, everybody's saying, let's do 580 credit scores. All of a sudden you're seeing lenders doing 660 and 680. And I've even heard some lenders maybe even leaving the FHA space altogether, and some going up as high as 700. So I see someone had a question about it, what a forbearance is, but basically a forbearance is where you're suffering a hardship and you call your mortgage servicer and you say, hey, I'm in this hardship, I lost my job, can I have a few months off? And they'll usually grant it if you can prove it, but the problem is that after that 3rd month or 4th month, all your payments are going to be due.
Yeah, and I want to add to that real quick, Greg. A lot of people think it's a free ride, right? Like forbearance is like forgiveness, right? And it's not forgiveness. It's shifting things around. So you're going to pay for it eventually, right? And that's what he's talking about. You're asking for a few months of forbearance. After the 4th month, you might have to pay all that back, or however they structure it. If you're a servicer, and that's who you really should talk to when it comes to your mortgage, is the people that are servicing your loan, because they're the ones that are going to be actually answering case by case and company policy style, ways of how they're going to handle that. Us lenders, a lot of us, we're not in the servicing department, so we don't know, we don't have an answer for that because we're not the one servicing your loan. So, but forbearance does not mean forgiveness. So don't go out and not pay your mortgage or hope that, okay, well, I got a few free months for free, I'm going to go and spend this money instead on jet skis or something. You know what I'm saying? That's not how it works. So yeah.
Yeah, so I think
All
the
right.
kicker there is that you know, if they have the 90-day late payments, once you get they're going to have to pay 90 days worth of payments in June. And if they didn't have a qualified, like, verifiable loss of income, an extenuating circumstance, if you will, they're not going to get the forbearance relief. And then they're just going to have to pay, or, you know, add it on to the back of the loan if they can qualify for a modification. It's really just going to be a headache if you can't just make that payment.
So what about jumbo loans? I seen that was a question we had. Are you guys seeing any jumbo loans being done right now?
There's some. I mean, your big lenders are still going to do some, but there's not many, and they've definitely tightened the guidelines. But there's always going to be some market for jumbo. I'm definitely not a jumbo guy. Well, size-wise maybe, but you know, I'm a small loan guy. But the guys in the jumbo markets, you know, how they're trying to find, really what they're doing for a workaround now is trying to do a lot of firsts and seconds and trying to put together loans and trying to stay away from the jumbo loans, just because so many lenders either left the space or they tightened up to the point to where the qualification is pretty tough.
I got something to add to that real quick. I'm not going to name any names or loan officers or anything like that, but I do know of a situation where a loan officer did not lock a jumbo during the sweet spot, and now their borrower has to pay $19,000 to get the same rate. Because what happened was they basically kind of eliminated the whole jumbo space, and what they're doing is they're basically making it so that you have to pay a different price to get to a different qualification area, and so it's going to cost them that much. And it's getting to the point where it's actually better for them to not go that route and go ahead and just put a whole bunch down, so they can, instead of being a jumbo, it goes to a conforming loan. Conforming meaning like lower than the actual limit, the jumbo limit, so that they can get a regular rate instead of it, you know, being a jumbo. But they have to put like, you know, like hundreds of $1,000s down to get to that point. So yeah, it's pretty crazy, but they're doing it to save the money, right? So yeah, that's what's going on with, at least from my experience of what I've heard, that's what's happened in terms of jumbo situations.
Yeah, you can see a lot of second trust too, a lot of HELOCs out there, 80-10-10s and such to make up for that jumbo space. But that'll be fine. I'm not worried about that space at all. I think, I mean, quite frankly, it's just going to be the lower credit score bunch that's going to get pinched the most. It really is. I mean, anybody who's going to have a below 640 is going to have a tough time getting a loan. I mean, it's going to be tough. I mean, in that general area, depending on, you know, the lender's overlays, it's going to be a challenge. So, I mean, I don't really. I mean, so inventory is low as it is right now. I mean, well, at least in my area. So I don't really think it's going to have listings flying off the market. I think it's still going to be something that's going to happen. There's just going to be less qualified buyers, but we're not in a buyer's market, so it doesn't really affect the whole real estate market as a whole right now. So I think, you know, in general, we'll be fine in that respect, as long as, you know, we don't have lenders going bankrupt. Like, that's a serious concern with the servicing issue right now.
That's man, that's crazy. That's crazy. What about home refinances and home equity lines?
I mean, go ahead, Greg.
Well, I'll say this about HELOCs. I don't personally do HELOCs, but I'll say this to everybody out there. If you personally have a HELOC and you worry that you're going to have a tough time over the next few months, I would probably tap that HELOC now, because they're going to shut that shit down real soon.
Right.
So if you have the option of tapping your HELOC now just to have a little bit of cash to get you through, I would do it, because it happened in 2008. They started, you know, either canceling HELOCs or if you had a $100,000 limit, they may reduce it to 50 or 25. So if you want to leverage some cash, do it now, because I think we're going to see that. And I think different parts, just like Jason was saying, different parts of the country will be impacted in different ways on this. You know, if you're in an area that is not government heavy and there's not a lot of FHA, probably because of loan size or purchase price, you may not see as many impacts. But in an area like mine, where like my particular pipeline, I'll tell you right now, I did an overlay of what my company's recent changes. And if I'd overlaid that over last year, I'm going to lose 56% of my business. And so now, I mean, obviously a little worried, but I've got to find a way to reinvent myself. So, you know, we went from funding nearly 50 million last year in my branch to, you know, maybe doing just over, you know, 30 or so. But your smaller markets where you're government heavy, those are going to be impacted the most. If you're a realtor out there, and just like Jason said at the beginning of the call, you probably have pre-approved buyers right now that are not pre-approved. So you need to be on the phone with your lender and asking, hey, are they still good? Because odds are, some of these lenders out there that are still, and I don't mean any disrespect to anybody that's on the call, but if someone's still, you know, touting, hey, we can do 580s and 600s, they probably can right now. But the odds of that loan actually funding is probably slim to none, because as it tightens more and more, I don't even care if it's blocked. There's plenty of lenders right now with blocked loans, and they said, you know what, as of today, if it didn't fund, we're not funding it. So you've got people with clear to close, ready to go. They're at the closing table sometimes, literally, and if it hasn't closed, they're not funding loans.
Wow.
So that gets us to a question in the room right here. It says, what happens when a lender falls out in the middle of a transaction? So I've seen that happen a couple times, and I guess you're just kind of SOL if you can't squeeze blood from a turnip. So if the lender no longer has money, what are you going to do? You got to dust yourself off and try again with a different lender, I guess. Like, I suppose you got to work with somebody that's going to stick around. I know all four of you personally, and I know you're going to be here. So, I mean, it happened in 2008. We'll come out of it. It's just it's tighter on those lower than 640s right now. And you're right, Greg. If anyone says differently, they probably don't have any idea what's about to hit them.
Yeah, and I even see it, and I think I see a lot of realtors still on Facebook, still advertising, hey, talk to my lender, he can do 580 or she can do 580. And just be careful doing that, because you're going to set yourself up for failure. I would go ahead and get used to the new norm. There's still lenders that are doing 620 and 640, and 640 may end up being a normal score. We went to 660. Would I like to be at 640? Of course I would. But I get it. I understand why we're higher. And you're also seeing some debt to income caps. And that's the other thing. You may have a high credit score borrower, and our CEO said it best on a call. You know, he basically, if you got a 750 credit score, and for whatever reason you had to go FHA because of debt to income or whatever, if you lose your job, your credit score can't pay your mortgage. So it comes down to debt to income and reserves. So that's what a lot of lenders are starting to overlay, is they're reducing the debt to income requirements. And I don't know, maybe you guys on this panel can speak up, but I know, for instance, we went down to 45% debt to income. And we haven't overlaid any reserve requirements. And realtors, if you don't know reserves, it's basically extra money left over in your account after you close, so we don't leave you broke when you buy a house. But you're going to see that. You're going to see extra money needed on top of the down payment, and then also lower debt to income.
I had a lender here locally tell me, you know, around here we had a lot of self-employed people. We're a beach town, a lot of second homes and stuff like that, a lot of investment property. We have a lot of self-employed, and there was a lender I'm friends with that was doing a lot of bank statement loans, right? Basing income off bank statements. And he was telling me that the banks were tightening up so much on those. Are you guys seeing that too? Or are you guys doing those sort of loans any?
Nope, they're done.
They're gone.
Yeah, but here's the crazy part about that is that those loans were actually performing loans. Some of the companies even had lower default rates than Fannie and FHA. Yep. But the problem is that when the market sort of, I don't want to say crashed, but when the market came tumbling down, there were all these margin calls. All these lenders had margin calls, and investors had margin calls. So, you know, you had liquidity issues. So now all of a sudden the investors that were buying these non-QM loans, the bank statement loans, they had to spend their money elsewhere. So they couldn't buy these non-QM loans, and these bank statement loan lenders or non-QM lenders, they didn't have enough of their own cash to fund these loans. So yeah, they go bye-bye literally overnight.
Man, so that's pretty much across the board. All you guys are seeing that. So
Yeah, that was like a couple Tuesdays ago.
That's old news.
Yeah.
He told me, he said the first thing happened, he said, when they were taking figure your income, and then they dropped it by 25% and required you to have 12 months reserves. And he said now they're pretty much not even doing that anymore.
they're awesome programs. I mean, I hate that they're gone. I mean, I've done several bank statements, and maybe they'll come back. I don't know, but I wouldn't say anytime soon.
So I got a question here. Changes with FHA. I know you guys addressed government-backed loans and stuff, but FHA specifically, what are you guys seeing changes with that? Does FHA still exist?
So I'll tell you this. There's a lot of marketing out there, agents and loan officers, myself included, that's talking about FHA starting at 580, and that's all like useless now. You're asking for trouble, and you're actually getting to the point where you're non-compliant because you're advertising something you don't have anymore, right? So there's, and advertising is a big deal in the lending world. Like, you have to have your advertising like compliant 100%. So right now, a lot of us loan officers are probably out of compliance with their ads right now. So that being said, I mean, that kind of paints the picture of, like, we shouldn't be talking about 580s anymore.
Really? So you're the equivalent of McDonald's saying their ice cream machine works.
Yes.
Yeah.
Right. So it's not that we don't have 580 programs. They're still out there. FHA didn't change anything. They're just kind of impossible to get. So if we were trying to get a rate for one, we would have a rate, but it would cost us 6, 7, 5 points to buy the rate down, and we can't charge a buyer more than 2. Mm-hmm. So someone asked, how do realtors, what can they do to get the deal through closing? Well, if we have to charge a 580 buyer 5 points to get them a rate, then they can only buy 2, then we're going to have to get that seller to pay 3% to just get the buyer to get a rate to buy their house.
Yep.
So it's not that they're not out there, and they're also putting overlays on. So overlays are, like Greg was saying, extra reserves or lower DTI, lower debt to incomes, lower payment shock, just all sorts of other things. More of the 580 to 640 credit scores are going to be manually underwritten instead of going straight off the DU approval. It's just going to be a more monotonous and expensive process.
Yeah, and let's pretend you have a file that's perfect, Donica. Like, you have the DTI, you have the reserves, you have everything. It's still, the rate itself is just ridiculous, right? Like, for example, you guys, everyone here on the call might not know what a buy down or discount or a lender discount is. It's basically what you have to pay to get the rate, right? So there's par. Par means no one pays anything. You don't pay anything, and the lender doesn't give you anything. So that's a par rate. So let's say the par rate's 4, right? Well, at this point, we're not seeing anything par. Everything you have to buy. You have to buy that rate. So that means you have to bring money to the table to pay for that rate. And like she said, $5,000, $6,000, $7,000 just to get the rate. It's getting to the point where it's almost as much as the down payment on an FHA, depending on the house that you're buying, right? It's just not doable. It's basically what it is.
So what are you guys, well, the Feds dropped the rate, and we should know as real estate agents that has nothing to do with what the end buyer's rate really is. Even though, we post all over Facebook about, rates went down. They didn't really go down. Like, what are you guys seeing, like that good, perfect borrower? What are you seeing them getting as far as a rate right now?
And I laugh, and everybody else is too. Literally, I mean, I've never seen anything like it. It can change every 30 minutes, and I mean, I've been in the business for 14 or 15 years, and I've never seen anything like it. And well, I don't know, guys. What was it, a week and a half ago or 2 weeks ago? We saw like almost a full point swing, maybe even 1.25 points in rates in 1 week.
Yeah.
Well, on March 9th, we were seeing. Remember that beautiful March 9th? We were seeing 2.875s and all across the board for like a minute and a half, and then all of a sudden it was in the 4s, and then back. We still have pretty decent rates right this minute. They're just a little pricey on the back.
And I mean, of course, we should have expected it, right? I mean, it's the market responding to the demand, right? I mean, so many different people trying to borrow, so many applications. And I mean, why did it shift so quickly? Is because, well, crap, we got so many applications coming in. We have to do something about it, right? So that's an economic thing from my perspective, not just a mortgage thing.
And Larry, that's a good point. And that's right now, rates are technically, for lack of better words, they're artificially inflated right now. So if you look at the MBS market and the Fannie Mae coupons, and you look at the the 10-year Treasury. Rates should be lower than they are right now, but right now they're artificially inflated because lenders have to basically catch up with all their backlog. So if they drop rates suddenly, then all of a sudden they're going to get flooded with backlog again. And you know, I'll give you some numbers for, well, I can't give you specific numbers for our company, but we saw, you know, almost triple the amount of submissions we were seeing on a daily basis. And you would say, all right, we'll just hire more people, where everyone was trying to hire more people. So you can't just throw bodies at it. So the only way they can do it, and one of the terms is called throttling, is basically they have to raise rates just to slow the pipeline down.
Well, not only that, Greg, but we've got the back end of the mortgage systems with our servicers bleeding money. With, like you were talking about earlier, with the margin calls and the defaults, they're going to have to pay so much money forward unless Ginnie Mae does something to stop that bleeding. So we won't actually know what the damage is really for another couple of weeks, I think, until they come out and tell us exactly what they're going to do to relieve that part of the bleeding.
Yeah, I don't expect it to get better anytime soon. In fact, I think this month's going to be pretty bad. I think if more people start to not pay and start to potentially default on loans, it's going to get ugly, and it's going to get ugly quick. The other thing that agents need to keep in mind, for the agents that I talk that are listening, is be careful with the pre-approved buyers that you have, not only from the credit score standpoint, but if somebody was pre-approved at, you know, the lower rates that we have, and now that they're higher, you know, keep that in mind, because if somebody had a tight DTI, now they might have to pay down points. If they can't pay down points, then they might be stuck. So it's something to keep in mind for sure.
Yeah, re-qualify right now.
Right.
Re-qualify everybody.
Right.
Yeah.
Yeah, and something we talked about earlier, in the secondary, now they're starting to change their process on how they're going to buy these loans. So there's there's us who originate the loans, and then there's a secondary market that purchase the loans, depending on who you're talking to, right? The secondary market usually has their own way of underwriting things or checking things. They're changing some of those requirements. Like, I've heard that they're actually verifying employment before they buy the loan. And that never happened before, or that wasn't typical or the norm, but now they're doing it. So it's getting to the point where loans are not being bought, right? So you have a company who originates a loan, they finance a loan, of course, or whatever, and then they're supposed to sell off the secondary is not buying it. So these people are stuck with the loans, and therefore the liquidity becomes like nil for this company. So, and that's verifying employment before they buy. And that's something, again, that's not the norm. So they're tightening the way they're willing to accept these loans now, which is affecting everybody basically.
Yeah. So Hal's got a great question. How long, if you get somebody that's rate locked, how long does that last right now?
Typically, it's 30 to 45 days. I mean, it depends on the rate lock and how long the closing date is. You know, the general longest lock period you'll see is 60 days. I mean, some people do longer. It depends on what you're looking for, but typically it's 30 to 45 days, depending on the closing date and what's needed.
Yeah, we're locking all of our refinances on 45 days for the cost of 30, just because we're freeing up that pipeline for the purchase money. So that's working. That's just what we're doing. I think 45 days is pretty much the rule of thumb right now. It's taking a little bit longer. I mean, appraisals are taking longer. Everything's taking longer because we're all locked down.
Right.
Now, if they get a rate lock, does that guarantee they'll get a mortgage?
No.
Well,
It guarantees they'll get a rate if we close their loan.
Right.
Yeah, I mean, there are already lenders out there that rates for lock, like I said, and people were clear to close, and they cut off funding and said no, and so people had to go elsewhere and try to find funding. So yeah, rate lock doesn't necessarily guarantee anything. Guarantees, well, I'd say that back. She said it perfectly. If the loan is closed, then you're guaranteed to get that rate, but that's the only guarantee.
Yeah.
And so I saw someone in the chat there. I just shockingly got an appraisal waived this morning. You're going to see a lot more of that with, they call it PIW, property inspection waivers. You're only going to see that on conventional loans, Fannie and Freddie. But depending on the strength of the borrower, plus the data for that particular area, if there's enough data to prove that the house, that the property is worth the appraised value that the loan officer is keying in there, when they run it through an automated approval system, they can get what they call a PIW, property inspection waiver. Basically means you don't have to have an appraisal. and then the borrower or the buyer will have to sign a form saying they're waiving their right to the appraisal. Yeah, you'll see more and more of that.
Yeah, today I got my first eligible. Well, I didn't get the PIW, but I got eligible for basically a desktop review on a Fannie deal. I don't know which way I'm going to go yet. I mean, I'm sure the value is going to be there, but it's nice to have the desktop review option now instead of an appraiser going out there, given the current environment. So it's going to be interesting.
So my wife is a loan officer too, right? And she had a client who, because of the coronavirus thing, did not want an inspector or an appraiser to come into the house unless they're like prepared, whatever. And then I guess they were able to approve a drive-by appraisal, right? So literally, it is what it sounds like. They drive by the house, they look at it, they go, "That's good enough," and they drive off, and then that's how they appraise the house, right?
Like a BPO.
I guess, but
Yeah, it's there.
It's
Yeah.
exactly like that.
Yeah, I mean, it's crazy because, like, I mean, you're supposed to check all these things, and they're like, "Yeah, you know what? It looks good. You know, we're fine." They don't even get out of the car. So yeah.
The other good news is FHA and VA seem to be loosening up on that a little bit because of the Rona. So that's going to be nice. A little bit of breathing room on the appraisals will give us a lot of space on the closing timeframes, I think.
Yeah,
Because
That's
they're
positive.
allowing exterior only, right?
Yeah, they're going to
Yeah.
allow them just to not drive by, but yeah, just do the outside.
Right.
Heck,
Yeah.
I got a question here from Linda Bennett. I've heard as of April 2nd, 2020, FHA, VA, and USDA application will be limited to a minimum score of 680. If the buyer is already locked or in the process of their loan, will that apply to them?
That's
No,
inaccurate.
none of that.
No,
Yeah, it's
we're at
yeah,
640
none
for
of
sure.
the government agencies have changed anything. It's all lender overlays at this point.
So
Larry,
that's
what are
probably
you
the
at?
lender she was working with.
I believe we're still at
Right.
580. We're still at 580, but it's like a manual and all sorts of, I mean, but no one's getting approved because like the rates are so crazy and like the buy downs are so crazy, right? I mean,
Yeah.
like, so I'm trying to run a 640 right now. But because the buy down is so crazy, like there's no point because they don't even have the funds for that, you know? But yeah, I mean,
Yeah, I'm still looking okay across the board, 640 and up. Like
Yep.
I'm not going to struggle with anything with a 640. I'm
no.
having a hard time finding DPAs or bond money. Jason,
Yeah.
where are you at?
I can do 620 now with a haircut. You guys know what that means?
Well,
That's
we do. You might want to explain to the rest of them.
so a haircut is basically taking a huge hit on the comp and not charging the buyer and making it work in the buyer's case. Basically doing a concession on the cost of what it would typically cost to do a loan at that credit score. I only have one. In fact, I pulled it over the weekend. This lady, she's in that 620 to 640 range where I had to do that on. And other than that, I'm just throwing word of caution out there. Anybody who's looking to do it probably wants to either look at improving their credit score somehow, adding reserves, or maybe just putting things on the back burner until things calm down. I know that's not what some agents want to hear, but unfortunately, that's the environment that we're in right now.
Agreed. Greg, where are you guys at Fairway?
Credit score wise?
Yeah.
Yeah, 660. But like you said, the rates are still, good. We're still seeing rates with a 3 in front of it, so that's always positive. So rates are still there. It's just we're just going to have to get used to a new normal, and people are actually going to have good credit and money to buy a house. When you think about it, it sounds funny. We've just been so used to being able to, as loan officers, we see that approve eligible, which is just in our automated underwriting system. And it's like, all right, cool, we're good. And sometimes I've closed loans on VA, especially. I've closed loans with, 70% loan or debt to income on VA loans, where someone literally had a 70% debt to income. But VA, and not to go off on a tangent, but the good part about VA loans is that they're not so much debt to income based. It's more of a residual income, which is really the most common sense way to underwrite something. It's how much money will they have left after they pay all of their bills. So not as a percentage, but physically how much money. So VA loans are still really strong. But I wanted to say this. If I was a realtor right now, the first thing that I would do tomorrow is I would go through my entire buyer list and get with my loan officers, and I would requalify everybody. I would have a conversation. I would say, the Smith file, the Jones file, are they still good at the same price point? So I would do that first. If you're a big listing agent, I would go ahead and prepare all of your sellers that you're going to be asked to pay for closing costs, probably more so than you were before. Because if buyers are having to have, more of a down payment, they're having to have reserves, then they're probably going to need a little bit more help, either, like Larry said, buying the rate down, or they may just have to have, some reserves build up. So I think that's going to become the new norm too. And this may actually shift it more into a buyer's market. I think we need to be prepared for that.
Yeah, so I just got an email from one of the people that are working on my file. It would look good. They're approved and everything at like 640, but we need a seller's credit.
Right.
Yeah, and before we didn't, but now we do. So yeah, that's what's happening to my files now.
Hey, so Amber Thomas over on Facebook, she's got a great question for you guys. What about a client with USDA? They got a 40% debt to income and a 690 credit score.
That should be okay.
Yeah.
I don't think there's any issues with that. As long as we'd be looking for automated approval on that.
Yeah, that should be an easy one, right?
I would think so.
Yep.
Send it to us if she needs somebody.
Right.
So what about those 203K loans? What about those FHA 203K? Does that not exist? Same thing?
Good.
Really?
Yeah, we can do them.
Wow.
Yeah, no big deal.
Yeah.
They're going to have the same overlays, but we couldn't really do those below 620 before either. So yeah, really kind of same old game with those.
So I think
I'll be honest. I don't do them.
Send them to me.
So the bottom line, and because I would say that I'm probably the most civilian out of all the loan officers that are here, like layman, I guess I would say. And I think the bottom line is, it's not that a lot of these loans are getting affected by, Fannie or Freddie or the government. It's actually the lenders that they're creating these overlays, right? Because we're protecting ourselves and we're trying to survive, right? The liquidity issue, right? That's not a government thing. That's, like Quicken, for example, there's rumors that they might need a bailout, right? So that's not just them. That's a lot of different companies that's happening to. They're just the big boy, so everyone knows about them.
I feel like as an agent, I feel like I never had anything closed with Quicken anyway, but everybody got a pre-approval letter.
Yes.
Amber said her client has a 40% debt to income, and the lender came back and told them they want a 36% debt to income. Sounds like she needs a new lender, doesn't she?
That's an overlay. Yeah, and someone had a question I see in the chat. What's an overlay? So basically, an overlay is something that the lender overlays on top of the USDA or FHA or VA guidelines. So, for instance, FHA, I think FHA will go down to, what is it, 550 technically, or 500? I can't remember, but most lenders are going to overlay that to, well, before at least 580 or 600 or 620. So an overlay is just a lender's overlay on top of the regular guidelines.
Here's another example that's pretty interesting. The VA doesn't have a credit requirement. So VAs, they have no credit requirement whatsoever. But of course, people are not qualified unless they have at least a 580. Some, the non-QM did like for as low as 500. So an overlay is basically like Greg was saying, it's artificial is a bad word, but it's just an expectation that the lenders have for the people that they want to help. Right? They want to help everybody, but they have to have some sort of a line drawn where they're willing to or able to help, I guess I should say. So an overlay is a lender created expectation, not the government created expectation.
Yep.
Wow, Danica, you see that question? Ann Abrams said her lender told her yesterday all 203Ks are suspended.
Yeah, that's bullshit, Ann. We're doing them, same old thing. So like, there's nothing has changed about our 203Ks, honestly.
You'll hear this a lot. Okay, you'll hear this a lot. You'll hear a lender use an absolute. Well, it's them or their lender, their company. It's not. We're no longer doing FHAs. No, you're not no longer doing FHAs. Other lenders are doing FHAs. So don't take the lender's word for it when they say certain things are not acceptable, whatever. I mean, a lot of people think that you can't buy a house without 20% down, right? Well, that's the overlay of other banks, but for us, we can do 3.5%, whatever. So make sure you check your facts when people use absolutes like that, for sure.
Yeah, agreed.
So one of the other
I'm sure
questions.
Fairway's still doing them.
I think, unfortunately, now more than ever, it's worth getting a second opinion on any question that you have. I mean, obviously, I think people are, but definitely keep that in mind.
I think as long as you're working with a reputable lender, and all four of us on this call are, there's dozens of us. And, if you're connected with other lenders throughout the country and you know who we are, that we can, reach out to other reliable lenders. I think it's really important to make sure you're with someone that's not a fly-by-night used car salesman, like someone who really does like mortgages and know what they're doing.
Just get a second opinion.
Right.
Except for Larry.
Yeah. Don't send me any deals. I don't want them. But no, seriously, just get a second opinion. That's all you got to do, right? Like if you hear someone say something, it's like, wait a minute. Okay, let me ask this other lender. Hey, this lender said this. That lender will probably be like, no, that's bullshit, like Donovan said. Now, there's a chance that they might have the same guidelines, and they might be like, yeah, that sounds about right. Then maybe you should get a third opinion, right? But just don't go with what one lender says. You should probably talk to everybody.
So Ann, where Ann Abrams? Where you said that person was your second opinion? Where are you located, Ann? We'll wait for her to put it in the chat. Ann is in Arizona. Ann, I have lots of people in Arizona that I can connect you with, and I don't know if any of you guys are licensed in Arizona, but feel free to reach out to any of us, and I'm sure we can put you in touch with someone.
Oddly enough, I am licensed in Arizona, so yeah.
All right, there you go.
2 or 3K.
Oddly enough.
Yeah. And then, so I guess Gary asked where we were all at. I'm in South Carolina, Gary, and I'll let you guys say again where you're from.
I'm in Maryland. I need DC and Virginia as well.
I'm in like 10 different states, so just ask, I guess.
I'm in Dallas. I'm only Texas.
So Amber Thomas said, why are some lenders saying they have 0% interest?
No lender saying that.
They're not.
No lender is saying that.
No lender's saying 0% interest.
They better not be. If they are, you should like literally report them.
Run. Yeah, run.
Right, run the other way.
The other thing is if you're a realtor that has done a lot of state bond loans or down payment assistance loans, those are probably going away. There's the bond agencies are still there, but most lenders are shying away from those. Someone you guys on the call, you may still offer them, but I know all my friends at different companies, they're dropping them every day. And the state housing agencies, like they're saying, well, wait, don't go anywhere. We still want to do it, but the problem is that we're worried on the back end that they're going to get stuck on our warehouse lines and we're not going to be able to sell them. So if you're used to down payment assistance programs, I'm not saying for sure they're going to go away in your area, but I would definitely check with your lender.
So Brian asked a question I want to answer real quickly. What type of lender is signing up the most? Banks, credit unions, small banks, etc. I think it's a case-by-case basis, but the number one for sure are the non-QM or exotic loan companies, right? And I have a theory as to why, because they normally are the investor. They're normally the ones who put out their own money, right? No, they might sell out to the secondary, but normally they're the ones holding on to the file. Whereas other lenders who are not the non-QMs, the one who does like the regular bread and butter loans, we set off to the secondary. So we actually have financing kind of sort of, as long as we get our loans bought, right? But these non-QMs, they don't really have that as much in the same capacity. So that's the best answer. But in terms of like credit unions and small banks and such, I think they're all going to get overlays. It's a case-by-case basis. I'm pretty sure, and just in this call alone, you have like 4 different companies being represented, and we have different ways of things happening or changing, right? So it's a case-by-case basis.
I would just call your favorite lenders right now for all the real estate agents listening. Like, call your favorite lenders and ask what they can do. Like right now, I don't have an issue getting a renovation loan done or land loan or construction. We have a few jumbo outlets where, we're going to be a little harder on the 640 and down, but otherwise it's business as usual. So you just kind of got to take an inventory of what everyone can do and make sure you've got your bases covered. I think probably your big banks are going to still be able to offer the down payment assistance program, but you're going to wait for it and you're going to pay for it. And, you know, it's going to be expensive and it's going to take 65 days to close and you're not going to know what's happening, but that's going to be the cost of doing a down payment assistance loan. I don't think any of the four of us on this phone call are going to be able to do that. So not for a minute anyway. They'll probably come back. I think that'll come back before non-QM will, for sure.
Yeah, well, I've been searching, right? And supposedly they're available, but of course it's more like, yeah, we got them, and then the conversation ends right there. It's almost like we got them, but don't bother. Basically, what they're saying. You know, I mean, before this happened, it was already tough to close a down payment assistance program, anyways, right? There was already a lot of hoops and a lot of barriers to entry, and a lot of paperwork, and you know, don't expect them to close early. So it's already tough before this happened. So just imagine this happening, how that's going to affect the availability of that. So yeah, I'm searching for down payment assistance, trust me, because a lot of agents are asking for it. Haven't found anything yet.
Let's see, banks, like I said, will probably have bond loans in the lower FICOs because they have more financial backing to support holding on to them. Credit unions will probably tighten up more than your typical lender, and then your correspondent lenders like me and Greg and Larry, and your brokers like Jason are all probably going to be fine, I would imagine, throughout the whole thing.
Amber asked if any of you guys were licensed in South Carolina. I know Greg is. I don't know about the rest of you guys.
I'm not.
No.
Yeah, Amber, Greg
There
Tanner.
are no other licensed law offices in South Carolina. I'm the only one. So yeah, call me.
Greg's good people. He's good people.
I definitely highly recommend Greg for sure, especially since he's on this call, you know.
Yeah,
we all actually know each
I'll
other
pay you
too.
later.
Brian Rosa said that he feels like he's getting sales pitches, not reality local. That was one of the reasons I wanted to set up this call when I made that post, and I figured that Larry and Greg would do it. I'm glad that Jason and Danica get on the call with us too. But I tell you, locally, I mean, well, you guys are seeing that. There's a lot of loan officers really didn't have much business going on before this. Now that you have even less going on, and yeah, sometimes they just tell you what they want to hear, and they just hope they can squeeze them through.
Yeah.
So I used to sell cars.
Yeah.
Okay, I used to sell cars, and I mean, you know, I'm not going to defend the industry. They are a bait and switch company, right? Like bring them in, get them on the floor, and then tell them that they're on the wrong car and get them to buy a different car, right? The reason I'm got the mortgage business is because it's a little bit more regulated, right? There's a expectation for us to what they call command the confidence of the community, right? So we're supposed to be more ethical, but there are lenders who are going to just get you in the door, right? And then, you know, of course, based on your credit pool, they can be like, okay, well, maybe you should go this, whatever. So you're going to get a lot of that because ultimately they just want your credit application so they can see if you can even qualify for anything. But yeah, they're going to, again, you know, I mean, it's not just locally, the internet does it too, right? I mean, quickly, right? I mean, 2% interest rates, you know, whatever, you know, you click and you find out that, you know, there's like a long line of like small print as to how to get that 2% interest rate or whatever, you know what I'm saying? So it's not just local, it's also online as well. So yeah, I mean, like we said before, get a second opinion. Or
Right.
I'll say this, and it's going to sound very, very negative and doomsday, but unfortunately, I think it needs to be said because there is a positive on the other side of my statement. But there are going to be loan officers, realtors, and mortgage companies that don't make it through this. There are going to be some people that are going to be impacted. You know, your loan officers, so like Larry was saying, some of those LOs, and maybe even some realtors that are in that 1 or 2 deals a month, and they're in those low credit score FICO ranges or those BPA, the down payment assistance programs. If that's been their bread and butter, it's going to get rough out there. So you really want to try to diversify yourself and try to find some other ways to generate business, because that business is going to slowly go away. And I don't think we've seen the end of the changes either. I mean, I see companies every single day changing their guidelines and changing their minimums. So we're definitely not done with this. And Thursday is going to be interesting because the unemployment numbers are going to come out again. You know, last week the unemployment numbers were ridiculous. It was like the highest we've ever seen. It was like 3.3 million newly unemployed. And I think the record before that, you guys correct me, but I think it was like 600,000 in a week. So this week they're expecting to see a higher number, mainly because last week's number probably wasn't accurate because all the states were so far behind in unemployment claims that they weren't I guess reporting correct numbers. So it's going to get worse before it gets better. But on the other side of this, we're going to see probably fewer agents, fewer loan officers, lower rates, because the lower rates are going to come back because they're going to have to. That's the only thing that's going to drive the economy back. And I'll say this one more thing. Sorry to take up too much time, but in my opinion, our real estate market, our economy, we were on fire, and we weren't ready for a pullback. We weren't ready for a recession. This is just this crazy virus that literally took us all down. But I think if we can get on the other side of this, I think you're going to see us roar back very quickly.
I agree.
Agreed. Yeah.
Yeah.
And I want to say, Greg, you can take the floor as much as you want, bro, because you're definitely the voice of reason, and you've probably gone through a lot more than we have. So yes, because I'm not in the mortgage business 14, 15 years. You know, I'm not sure how Donica, I think as an underwriter, right? She's been in the business for a long time. I don't remember how long Jason's been, but I think you might have the most tenure here. So yeah,
It's my 20th year.
Yeah, and I'm
I've
only
been
25.
doing mortgages for half of my life now.
Yeah, but as an underwriter, right? I mean,
I was an underwriter
right?
for most of them.
So you know, Greg was talking about companies shutting down, whatever. I've already heard rumors. I haven't confirmed it. I've heard rumors of like non-QMs like done, like they're just gone, like poof, right?
Right.
So and that's you know, I mean, what it's like roaches, right? You see one, there's gonna be a whole bunch hiding someplace else, right? There's probably gonna be a lot more fallout after this, and you know, like they were saying, it's gonna get worse and it gets better. Because right now a lot of us are in survivor mode, or a lot of us in panic mode, but we haven't like officially gotten like the shutdown yet, right? So just again, we don't want to be doomsday, but just expect to hear a lot of news about bailouts and companies shutting down, whatever. And I'm actually excited about it. I'm not wishing negative things on anybody, but I'm excited because I think the ones who survive want to get a lot more business, want to get a lot more market share. You know, so if you're an agent, you know, and I'm not a real estate agent, so I don't understand, but if you're an agent and you can figure out a way to keep going, you're gonna enjoy a lot more business once the dust settles, for sure.
Absolutely.
Yeah, close every deal you can and save as much money as you can right now. I mean, hopefully you have already, but I mean, anything that you can get closed, close it ASAP.
Well, I think it's important right now too, agents, because I'm having a really not a hard time. I'm having a very clear time focusing on the people I can close right now, and those people happen to have 640 plus credit scores. So I'm focusing on those and moving the 640 and down into credit repair and telling them what they need to do to repair their credit and get to that 640. I'm not ignoring them, but the bottom line is whoever plays this better right now, whoever's pivoting and being directional in your, you know, work on your database. That's going to be your higher qualified leads, and, you know, let your Facebook leads season a little bit, because you're going to have to work harder and they're not going to qualify right now. So work smarter and harder, like get on the phones, talk to people, you know, let people know where you're at, and, you know, fish in the right pond. If you're fishing in the wrong pond, you're just going to be defeated. So this is where the powerhouses are going to stand out. This is for, you know, those of us who were made for this are going to shine right now. You just got to make sure you're pointed in the right direction and, you know, really target down on that better quality audience right now.
Any of you guys do Michigan? Any licensed in Michigan?
Yes, I'm licensed in Michigan. I'm gonna go ahead and copy the states and put it in the chat for you guys, because, you know, I can't remember it. So yeah.
That's great. So guys, when we got all these people filing unemployment, we think this week's going to be the same. We're going to have like several million people filing. So how do you think that's going to affect people? Well, how's it affecting people right now that are trying to get a house and they just got on unemployment? Or how do you think it's going to affect people, you know, in a few months, hopefully, when we're through this thing?
Well, if they don't have a job, they're not going to make their mortgage payment, and that's going to make this ship sink a little slower before we come back up for air. Obviously, we're not closing if you lost your job. I have a hairdresser right now who's on hold because she's not essential.
Yeah, how's that working? Like these people that aren't essential, you know,
You don't have any.
They can't legally work.
Yeah.
We need
So-
their income to qualify. You can't legally work. Nobody knows how long this is. I wish we
Really?
had a crystal
Right.
ball, but we can't close until they have income again.
Wow.
What
So that's
what
hurting.
we're trying to do with some that have been on unemployment, if they think that it's going to be short-lived, and the one thing too is with the stimulus package that and I don't know all the, I need to do some more research, but some of your businesses are going to get paid or be able to apply for forgivable loans if they keep their staff employed. So I'm hoping that some of those people that have been unemployed are going to go back to work, even if it doesn't mean they're going to physically go back to work. They're actually going to get their paychecks, because those small businesses are going to be able to apply for these forgivable loans if they haven't laid their people off. So some people that have been impacted that we're currently under contract in our pipelines, what we've done is basically kind of left them floating for now, as long as the seller is okay with it. But just that they know that at any minute that seller could just say, all right, I want to put the house back on the market. But if they're allowing them, then we're just floating them until they go back to work, basically. One other thing, and I don't know, everybody's from different parts of the country. I see a lot of agents when they, particularly on your higher end homes, when you do these huge price reductions, before you do the big price reductions, talk to your loan officer about how a buy down, and Larry talked about a buy down earlier. Talk to the loan officer about how a buy down would work, because let's just say that you've got a $400,000 property, which in my market that's a mansion, but that you got that $400,000 property, and it's going to be a conventional buyer buying that, and you can get 3% in seller concessions. So if that's $12,000 that you can apply towards closing costs, rather than drop that to $380 to try to sell it, maybe just keep it at $400, but offer that $12,000 in closing costs, and you could potentially take somebody that could put as little as 5% down, buy their rate down, and buy out their mortgage insurance, and give them a cheaper rate and cheaper payment than if you had dropped that price down to $380 or $360 or whatever it is. So right now is where you really need to get a little bit creative and work with a loan officer that really knows what they're doing. But just something that I see a lot. I see agents just real quick to drop the price quickly rather than try to think of something strategic and creative.
Man, that's awesome. That's awesome, guys. Well, I tell you, we've been here about an hour, and I've seen the questions slowed down. I really appreciate you guys doing this with me, and I feel like there's a lot of information here. Let me ask you, do you guys have anything else you want to say, or anything else you see going on right now that you think everybody should be aware of?
I want to say something, and I kind of talked about this in the chat when we were about to get on here. I don't want to be an asshole, right? But I'm going to say what every loan officer and lender is thinking, especially the ones that are friends with you. Don't talk about rates. Just don't do it. Don't talk about like the Fed cut this and rates are the low. You're going to put yourself in a lot of trouble, because number one, you're non-compliant, right? Number two, you're going to get a lot of questions you're not going to be able to answer. And then when you find out the answer and it's not what you want to hear, you're going to upset a lot of people, right? And of course, I know you're only doing everything to drum up business, but just don't talk about race. Don't talk about scores. Don't talk about anything like that. Make sure your lender is involved, and you're going to talk about anything mortgage related, especially now. Okay, now is a very good time to make sure to check your facts, right? So I'm addressing something that has been going on kind of ever since I started the business. So I've seen it, of course, and we're polite, so we don't like point it out or call people out. But now for sure, me being an asshole, I'm trying to protect you, right? Do not start that conversation. Okay, just don't do it, right? It's better for you to have a lender do it for you and maybe tag you in the post, whatever. But that's just a little piece of advice when it comes to marketing. Okay, so that's my last word for the night.
I just like to probably say this is only going to be a few weeks, maybe a few months. Just hang in there, lean on us. Hell, any of us will be happy to answer any questions for you. We can be your second opinion, even if we're not licensed. Like, we're happy to help.
Yep.
I guess we all just kind of got to stick together through this. It's not fun for sure, but we did this 10 years ago. We got through it, and everything was fine on the other side. So we'll do that again, I suppose. But I guess just put on your patience panties, because it's only going to get worse for a minute.
Right. I mean, like you were saying, like things are going to get rough, and it's time to adjust expectations, even as far as closing times go, and as far as the smoothness of a transaction can go, because I mean things are super volatile right now, and things are changing literally every day. So I mean nobody knows what next week's going to hold, let alone at the end of the month. So just everybody be patient and just roll with the punches, because we're all in for a ride. I mean this is going to be a ride for the immediate future at least.
And I think you lock it if you love it is the lesson we learned this month, is get it locked early, because you never know what tomorrow brings.
Right.
And I do want to add again, sorry, I forgot to mention this. Now might not be a good time to sell. Like, don't call people and say, hey, you want to sell your house, you want to buy. Now might be a good time to be an advocate, right? A lot of the people that you help close homes, they're probably looking to an expert to find out what they need to do about their mortgage or whatever, right? Get with your loan officer, your favorite loan officer, and talk to them about that, and then bring that information to your past buyers, right? And just by being an advocate and by being there and supporting them, you will earn their business when it's time for them to make another transaction. So, there's in a lot of coaching calls, a lot of discussions, we're talking about like not sitting there trying to pitch people or sell people, just be there for them and be the expert, because now they're going to need it for sure. And of course, if you're not a loan officer, go get a loan officer and just kind of discuss it, like I said, and maybe have them be a part of the conversation. At least that's my suggestion as to how you should test your database.
Sorry, one more thing. Please tell people to pay their bills. I know I'm not trying to be insensitive. If you can pay your bills, please pay your bills. If you can't, I totally understand that. But there's a lot of information out there that is being misconstrued as if people can just not pay their bills and there's not going to be repercussions. There will be repercussions. I guarantee it. I guarantee it. So that's just, just a word to the wise. Please don't spread any information that may or may not be, incorrect. That's all.
Right.
And I'll just end with what Danica said. I mean, if you love it, lock it. I've seen so many people just say, I just want that 8 cheaper in rate. And then all of a sudden that 8 cheaper in rate and the rate jumps up a half a point or a point. I've seen it. And it comes down to greed. And it's something mental they get in their head. They want the lowest rate. And so try not, it's not like Larry said, just try not to talk about rate. It's just something you don't want to get a part of. And 2, you're going to just sometimes a borrower or a buyer can literally drive themselves crazy trying to get the lowest rate. And it's come to, like, for me, I'm going to fight a little bit for it. But if they tell me I'm working with 4 other lenders, I'm going to tell them, you know what, good luck. My time's more valuable than that. I'm giving you a good rate. I'm giving you good service. You want to work with me, great. If not, you can work with the other 3 lenders. But, just try to let them lock down with one person, close that loan, and as quickly as you can. And one other thing, I had this just happen. We had a rescue deal that we took on, and we had to close it in 9 days. And that was this just happened. So that was during the midst of all this. So we did. We had it clear to close in 8 days, and they were supposed to close the next day. And the buyer's agent called me and he said, "Hey, Greg, you guys moved a little too fast. Now they want a couple more days." And I said, "All right, but here's what's going to happen: is someone's going to lose their job, so something's going to happen, and they're not going to be able to buy this house." And that didn't happen, thank God. But just think about it: if you put something off a day or even 2 days, crazy stuff can happen. People are losing their jobs, or people are getting cut back hours. And a lot of times with a mortgage, you've got 2 people in the household, but maybe only one person's on the loan. So I don't say try to close a loan where someone's going to lose their job and how are they going to pay for it. But if you have multiple people in a home, don't try to push that off. Maybe try to work on some type of early occupancy or something like that. But rather than putting that loan off, close it as soon as you can, because crazy stuff's happening. But one other thing, Jason, I love doing this. And stuff like we talked about is changing every day. I mean, I'm open to doing this, maybe weekly or bi-weekly. So if you guys are, I would love to.
Heck yeah.
Yeah, this is a great call today, man. There's so much information.
Yep. and it's the conversation just started. There's a lot more to talk about. So reach out to us. We can do this again, whatever. I mean, again, this is just kind of a segue to help everybody level up. So we appreciate the opportunity for sure.
Yeah, we're here.
Wow. Thanks, guys. You guys have a great night.
Yep.
All right, you too.
Thanks, guys. See you later.
Peace.